Trading cricket, racing and football, you're listening to the Sports Trader Podcast, brought to you by thesportstrader.com.
Good morning, 100 Clubbers. Welcome to our conclusion to Trading Mindset. So I hope you've all now had the chance to listen to Steve Ward and have a look at that and maybe grab the book and start reading it. But you've all listened to it now, and a lot of you have said that you've got out of it. So we're just going to finish going through the Trading Mindset book today that I've written, and then we're just going to have a bit of a discussion about a couple of things. I've also got an email that I received that I just want to go through and share the feelings. I'm not going to say who it came from, but I'll just share the sentiments in it and one of the issues that the trader's having, which is an issue I've had and we've all had. And we'll just see how you feel about it and what you think. So I'll go and do a new share and we'll go and get our book up. So the last thing we sort of went through last week was just about, the job and developing the business plan and everything. So you're now thinking about it as your business and taking your time, because remember, it took me 4 years to get consistently good at what I do. It was no coincidence that apprenticeships for most trades like plumbing, electricians, builders all take 4 years and doctors take 6. And I was saying to you about pilots, they don't just buy an ebook and start flying around. This is a business and it will take effort. So originally when I first started, it was just about learning about the markets and trying to make the right decisions and get the games right, thinking, well, I've just got to pick the team that's going to win to make money. And I soon found out that it's far more than that, because the markets are pretty efficient. So it's pretty hard to just find a winner. You can't just go off what you think. So you need to do some good analysis and make smart decisions, know when to get in, when to get out, how to find value, all that sort of thing. But then importantly, how to deal with losses when they come. You go on sustained losing runs. You might get 4 or 5 losing trades in a row or 4 or 5 losing days in a row. And when it is your income and you think, well, I need to win at this to make money, and you start sort of hemorrhaging money, it can be a bit of a concern. Yet it's not so much of a concern when running a business. When you think, well, I need to go and upgrade my fridges, or I need to get new, whatever it is you need for your business, you just go out and do it, and it doesn't have such a mental impact. You might have just spent $5,000 on new stock or a new system, cash registers, whatever for your business, but you just think, well, I'll make that back over the next 3 months by just doing what I've done. And it's the same in sports trading. If I have a losing day or week or even a month, you've just got to have the faith to think, well, if I just keep doing what I've been doing that I know works, it will come around, because luck plays a lot of part in whether you succeed or not. So sometimes you can make ordinary selections but have a bit of luck and win, and other times you can make great selections, get great value, but due to luck, it's bad. Like if you're a Liverpool backer, it was a lot of bad luck that they lost to Arsenal. I mean, you saw mistakes there from the goalkeeper and from the captain, Virgil van Dijk, that you won't see again in 5 years. So that's just bad luck. So we're going to go on and have a look at sort of getting started, because when I was starting out, I never had anyone telling me all the mistakes that people were making and how to avoid them. And as you find out reading this book, we all make mistakes and we'll continue to do so, but a lot of us can't explain why we keep on doing it. So I now have worked out, thanks to Steve Ward and following him and reading his stuff and understanding myself better, and then learning that so many people that came on my courses were making identical mistakes and they all thought the same way as I used to. So I worked out that I now not only knew what they do, I now know why they do it. And I know how I stopped myself doing it. So I figured that I can stop you doing it as well. Because one of the first questions I asked Steve in that interview was, or one of the first statements I made was, the one thing I learnt was you can't fix something until you know you do it. And once you know, you can fix it. And I'm going to give you a very quick example of how quickly you can fix things once you know what you're doing wrong. And I hope she doesn't mind, but she did make it public in the room, so I'm not telling stories out of school. But I'm going to refer back to Wendy again. What happened before Wendy met me is she used to lose a lot of money when she was wrong, and she'd make a bit when she was right. She was right a lot more than she was wrong, but when she was wrong, the losses were big. And after we met and I had a discussion with her about all this stuff, she went and did some analysis on her own account. And she worked out that had she just taken the loss at £50 per race, when that loss got to 50, if she just clicked the button, she would have been, probably £12,000 better off, I think. I don't know the exact figures, but I think she worked out that she would have been winning either 3,000, she would have been £9,000 up instead of 3,000 down or something. I'm not sure of the figures, but it's a significant difference if she'd just taken that loss. It was a huge difference to her bank. And so she'd worked that out, right? So what Wendy had started doing was taking those £50 losses, and she'd find then she'd make it back in a day or two, and it would just be recovered. So she stopped worrying about it and just doing what she was doing, and she was flying with her results. Then the other day, she posted in the room that she'd taken a £200 loss. And yet she already knew in her head what she should do, and she already knows 100% that if she does A, the result will be B. She knows that. But yet, for some reason, she did B and got the result C. So she knows what she did wrong. And the great thing is she only had to do it once. And she really chastised herself and she said, I just made a mistake. And everybody makes mistakes. That's fine. What's important is how you react to that mistake. So what Wendy did was stop trading for the day, walked away, and then came back the next day and was fine, recovered the money. The old Wendy would have jumped in, gone in again, done the next race, possibly had another race and blown the bank and had to reload. We're all going to have slip-ups. We're all going to do things that we shouldn't do. What's important is working out why you did it. So look back on the race and think, why did I let that go? And as I've already told you, my normal answer will be, I just was convinced it was beat. I'm watching the replay and I still don't think it can win, even though I know it did. I still think that horse is beat. And we've all had cases where we've seen horses struggling like anything at the back of the field and the rest of the field's going really nicely. And so it's an obvious pick for us. But the horse wins. And we know now the mistake we made there was the price didn't blow out. The only reason we get into a trade was because we think the horse is going to go up in price. Doesn't matter how it's traveling, it's going up because other people think it's going badly too. But if everyone can see it's going badly, yet the price isn't drifting out, that's your warning sign. Just get out. Now we know to do that, but Wendy didn't do it. And she knows the mistake and she knows the outcome if she keeps doing it. So she instantly can fix it. And that's the key to what we're learning here today. Is don't think you're going to eliminate mistakes, because you're not. You're going to make them. You won't make them every day. Hopefully you won't make them every week, but you might make them, every month. I might do a game and I think, I've lost money. You know why? I just didn't put enough time into that analysis. I just rushed it. I hadn't looked at the players. I hadn't done my normal routine and I've paid the price. Because if you don't do the normal routine, eventually it will catch up with you. You'll get caught out. And so that's what happened. So Wendy's never walked away before. That was the first time that she realised, I've made a mistake here. I'm just going to take a break. And even if you take a break for 15 minutes, just get out of the room, go and make a cup of tea, then come back, it is like a fresh session. You just think, well, I'm going to just start my day again and chip away. So it's important that you learn how to deal with the errors as well, because you certainly won't eliminate them. So what I'm going to do is quickly, we did this on day one, but I'm just going to quickly recap it. Let's start with reasons that people fail. So if we can establish the reasons most people fail, the common causes for failure, we can try and eliminate them. So the first one was poor money management, right? Here it is, Wendy. They have larger losses than wins. So a lot of people email and ask me to help them out. And they say the main problem is they're winning 8 out of 10 races, but they're still breaking even or losing money. And I say, well, that's easy. Your losses are far too big in comparison to your losses. To explain why we find it very simple to take wins and why we struggle to take losses is what we were talking about with Steve the other day. We all do it. We can't help it. And it's ingrained in us. And I explained the other day about how it's very easy. If I said to all of you guys now, who would like 20 pounds, you'd all stick your hand up within a second, because I do this on my live courses. Who would like £20 right now? And everyone instantly just puts their hand up. And then I say, right, one of you has to give me £20. Who's going to do it? Nobody puts their hand up. And that's natural. That's instinct. So what happens is when we're trading and we've got a win, we can easily click the green button and pat ourselves on the back and think, what a great trade. Well done, done that. But when it goes against us, we'll hesitate and we wait. And that's what is in Steve's book, Sports Betting to Win, and what is in this book about telling you why that happens. Okay, because when faced with a winning situation, humans become risk averse. When faced with a losing situation, humans become risk seeking. They're prepared to take on more risk to let the loss get bigger. Okay, I can guarantee you if Wendy had done that trade the other day and it had gone up and she was looking at a £50 win, she'd click the button quicker than we can eat a packet of biscuits. But when it went to a loss, her instinct, and everyone has the instinct, you hesitate. You think, I'll just wait till it comes back a bit. And it doesn't come back and it gets a bit worse. You think, oh, no. Right, if it gets back to £50, I'll take it. And then it gets back to 50 and you think, oh, if it's come back that far, it might keep coming back. I'll wait for it to get a bit further. Then bang, the race is over and you've done 200. Yet if that had been a £50 win, there would have been zero hesitation in taking it. She probably would have taken it at 20 or 25. And everyone does that. And you have to overcome it. You have to realise when a trade's not going the way you like, you get out of it. And when we do racing week, I will try and do it a few times for you. I'll just say, look, I think this horse is going up. It hasn't gone up. I'm taking a £5 loss. Then I'll look to get back in. But once I do that, I've done two things. One, I've stopped the bleeding. I can't lose any more money because I'm out of the trade. Secondly, rather than sit there looking at it, hoping it gets better, I've now got an opportunity to look at another horse or a different position to see if that's a better opportunity. So subjective rather than objective decision making. So this is where people have a strong opinion, and despite the fact staring them in the face, they won't change it. So the biggest myth in roulette is the results of the previous spin have something to do with the next spin. You'll see people in there all the time that have said, oh, look at that, 6 reds in a row, it's got to be black, and they'll chuck all their money on black. Now, you and I know, or you really should do at this point, that the chance of black coming up in the next spin is exactly the same as it was in the previous million spins. It has zero relevance that the last 7 came up red. And it's the same with a coin toss. If you sit at home spinning a coin, don't be shocked if you spin 5 heads in a row. And your brain will automatically go, well, the next one has to be tails. But it doesn't. It's got exactly the same chance as those previous 5 spins. It's called the gambler's fallacy. So when you place that bet on red after the first 5 or 6 or 7 spins, you're not betting on whether there are going to be 8 blacks in a row or 8 reds in a row. You're betting on the result of a single spin. So the results are irrelevant. They're independent events. And we've got to look the same way. If I tip football games and I get 5 wrong in a row, I've got to learn not to be too shy to pull the trigger on the next one, because they're independent events. The previous game has no relevance on the next game, but that's something that I'm working on. And as I said, it's the same with the coin toss. The second mistake people make, well, just to clarify that first one, is it's the subjective versus objective. They put too much weight in their own opinion. So, just as people bet on red after 7 blacks, don't just back Tottenham after 26 games at Chelsea with no wins. We discussed that last week. And with Steve, they lose 26 in a row and people just think, well, that they're due a win. No, they're not. So they're independent events. So no exit strategy. Another reason people fail is they look at football and they go, I'm going to lay the draw in this game. Okay, that's great. So if this happens and there's a goal, I'll get out at that price. Well, what if there's no goal? What price are you getting out at? Well, I'll worry about that when it happens. So they don't go in planning the trade. So they do the research, they decide which game, and if all goes well, they make their exit and they think they've done a great trade, pat themselves on the back. What if it goes wrong? Do they have an exit strategy? Usually not. So most people I speak to just decide at the time, I'll just pull the plug at the time, I'll see how it goes. So I think you've got to have a bit better idea of when you're going to get out. So like Wendy does now, £50. If this goes against me, then I'm going to exit at that point. Because obviously if you go down £50 on a horse racing trade, you've got it pretty badly wrong. It's only going to get worse from there. So you may as well bail out of it. And then 2 races later, you've got the money back. But if you do a £200 loss, you're looking at 10 or 15 races to get the money back. Makes it a lot harder. So general lack of discipline as well. Most people come to me say their biggest issue is a lack of discipline. And I can't do anything about that, unless I sit with you, sitting behind you with a cattle prod, and every time it's time to get out and you don't do it, I zap you. You've got to do it in your own mind and execute it without hesitation. That's the point of why I wrote the book, to tell you why you do this and how to fix it. So Wendy now knows why she does it, because when we get in a losing position, our instinct, our brain will make us hesitate. It's instinct. It's automatic. You'll go, wait, it'll come back. It'll come back. You've got to then have the discipline to say, no, I've got this wrong. I'm just going to take this £10 loss and have another look at it, because otherwise you're going to just keep sitting there and your brain will just keep saying, don't worry, it'll come back. It'll come back. Don't worry. We'll be right. We can't be wrong. That's the ego talking, saying, no, you don't want to take that. Just wait till it goes up and gets in the green. Then we'll click it. She'll be right. Just watch. Bang, £200 bank blowing loss. And then you curse your brain, when it's like blaming your car if you end up in the wrong spot. It wasn't the car that took you to the wrong place. It was your brain. So if you end up on the wrong side of a trade, even though your brain's talking to you to tell you to do something, you can override it. That's the great thing. You are in charge of your brain. It's not in charge of you. A lot of people think it's the other way around, that their brain is in charge of their body, but it's not. You can change your thoughts. So betting at the wrong price is another bad one. And we've discussed value the other day, about coin tosses and whatnot. If you're placing bets with bookmakers, 99% of those bets are bad value. So if a horse has got a true price of 10 to 1, they're going to have it at 7 to 1 or 8 to 1 max. So they are running a business and they need to make a profit. And we've not got an option of if we take a better price with them or not, like we do on an exchange. If we don't like the price on an exchange, we can just lay it, if it's too short. I'll back it if it's too high or do nothing. With a bookie, you can either back it at the price they offer you or not. But they're no longer our only option. So I tell people now, you can get 10 on a betting exchange and you'll win 100 for their £10 bet or 70 with a bookmaker, but they just don't seem to mind. And they're the people that I'm going to try and get to over the next couple of years, all these young kids coming out of school and that get hooked on the ads on TV and all have Bet365 accounts and betting with Coral ad books. They got no concept of value. So I'm going to try and get them into some webinars and just explain value and how it works. So in my courses, I show a real example of this Miss Clayhanger dog. Now, I'm only going to breeze over this because we did it on day one. But remember, I had that £5 on her at 20, and after commission, I won 95. And with the bookie, they paid 6-1. So if you'd bet with the bookie, you ended up with 30 quid, and I ended up with 95 on the same dog in the same race for the same stake. So you can see how badly bookies rob you. Now, there are times to use them. There are times where they'll offer you, double bubble if something happens, or money back if this runs second. And then what you can do is you go and lay it on Betfair. And then if the horse runs second, you've won your lay on Betfair and you've got your money back with the bookmaker. So you're net in front. And if it does win, then the bookie pays you out and you've lost on Betfair, but you're square. So it's not a big deal. So no concept of value or a belief it's not important. And I told you about the argument that I had with the guy on Twitter. He thought the price didn't matter. If he wins his bet, he gets paid. If he loses money. And if you have this book, read this section again, it will explain why that is. But in a nutshell, if you and I played heads or tails and we did 5,000 spins, you assume 2,500 come up of each. It'll be very close. But imagine if each time tails come up, you'd have to give me £10. But each head that comes up, I'm going to give you 1.9 like a bookmaker would. So for every time that happens, you're getting 9 quid and I'm getting 10 quid. So after 2,500 wins, you've paid me £25,000. But I've only paid you 22,500. So you're down $2,500 just from bad value betting. All right. Value matters. Whilst it's very easy to calculate it in a fixed game like dice or roulette or something, it's not so easy in sport. You can't perfectly calculate the chance of Chelsea beating Spurs at Stamford Bridge. But when the research shows they haven't won there for 27 years, well, they have now. They won the year after I wrote the book. You've got to factor that in. So I think before that, the last time they won there was 1990. They'd lost 17 games and drawn 9 since they were there. So when assessing value, especially on sport, you've got to convince yourself that something's more likely to happen than the odds on offer. And the best way to do this when first starting out is estimate how many times out of 100 something's going to happen. And that's the way I do it. So if something will happen, I think, so Tottenham are playing Leicester tomorrow on Sunday. Okay. How many times out of 100 would Tottenham beat Leicester at home? I'd probably say 60 normally, but probably 50 at the moment. And they'd probably lose 30 and draw 20. So I would have Tottenham around, maybe 210, 220. So when you go and have a look at the price, if they're higher than that, in your opinion, you've got value. But it's not an exact science. So it's just about getting value. So you go and have a read about how all these things would be. So you just change your percentage. So if you look at 100 games with, Man United and West Ham, and you think, well, Man United would win 60%, well, then divide 100 by 60 and you've got 1.66. And if you think there'll be 30 draws, then the draw price is 3.33. If you think West Ham would win 10 out of the 100, then their price would be 10. So your market for the game would be 166 10 and 3.30. Now, for this game, Man United were 132. So under my theory, I would have Man United as a lay. You could just about back West Ham at a bit of value, 12.50. We thought they were 10. So clearly I've overestimated the chance of a draw and underestimated the chance of United compared to the rest of the market. So that's how I sort of work out the value. But we're going to do one this afternoon that you're welcome to come into. We're going to go and do another one in Football Form Labs. You've all watched the video now of the one I did with Nick from Form Labs yesterday. So I'm going to go and follow that up today and show you how I do it this afternoon. So come into that and you'll see how this works and how I work out prices. And we'll go and have a look at the Tottenham-Leicester game for Sunday, because I'm going to do a live webinar on that one as well. So another way people let themselves down is not keeping records. Everyone in business keeps records. So how do you expect to know how you're traveling if you've got, no records there, or where your weaknesses and strengths are? And that's what Wendy did. She went back through her records and she established the races that she was losing the money on. And so she's now worked out that she's not going to do 5, 6, 7 furlong sprints. She's not going to do group 1 or 2 races, because they're all good horses and they're all trying, and any horse can come from the back and win. She's not doing races that's got over £20,000 prize money, all that sort of stuff. She set these rules in and she's been going really well. But you can see one slip in discipline and look what happened. So also, like we've said, don't expect unrealistic returns in this game. As I've explained on day one, this is not different to any other normal job. So I just look at Sharon and I virtually doing the same thing. She's at her desk from 8:30 to 4:30, and I'm at my desk from 8:30 to 4:30. The only difference is I can get up from my desk whenever I want and go to the shops or go and play golf or have a day off. She has to be there. It's a lifestyle choice, not a financial choice. So don't think I'm going to quit my job, become a sports trader and make 200 grand a year, because that's just not realistic and it isn't how it works. So I often ask people, when they have a go at me for making small amounts in horse racing, and this is a whole different book. It's impatience. Once I teach people how to trade the racing and they decide they want to do it, they read some books, they do a course, they come here for a day and they get the hang of it, like Wendy's done, right? So I don't think Wendy will do this, but I'm going to use her as an example again. So now Wendy knows what she's doing. She's comfortably making money 19 days out of 20, right? And she's chipping away. So what people can do, and again, I don't think she'll do this, but what people can do is think, well, I've nailed this now, so I'm going to up the stakes. And instead of doing the £10 trades, they start doing 20 or 50 or 100, because they think, well, look, I'm so consistently making 150 a day, I'm going to start making 500 a day. And, they start making the money and think this is great. They're getting £5 a race, just as I showed them when they come here, and away they go. And then they start trying to make 10, 15, 20 or 50 and push the limits. They end up with unrealistic expectations, because as I say about selling stuff in your shop, if I sell 10 washing machines a week, sure, I can do something to try and sell 12, maybe 15, but I can't then expect I'm going to start selling 30, 50 or 100 a week. It just doesn't work. You can do a bit differently with a bit of confidence and think, you know what, I'm going to up my £10 to 15 or 20. I'll go a bit higher. And that's fine, but you can't go nuts. And the reason I want you to be happy with what you're making is, if I went and sat you on a chair outside the local bookies and every person that walked in had to give you a $5, how long would you sit there? You'd never leave, right? I'd never leave. Oh, Denise, come on. She's not the teacher's pet, but Wendy's the one that has been really open and shared her stories with us. So she's the only one I can talk about. If anyone else shares their stories and says, well, I've done this or I've done that or I'm doing that wrong, I'll talk about them. But Wendy's been really open and honest. And in a way, it's great for her because it holds her to account. She also knows now, this afternoon, if she goes and blows 200 pounds on a race, she's got to go into the room and tell people. Because if she's sticking her P&L up in there every day, they're going to want to see it. And so now it's like, well, now I'm accountable. And it's good. You're accountable to yourself and you're accountable to others in the group and think, well, I'm going to just take this small loss because I don't want to show them that I've lost 200. But if I just take a £6 loss, I can go, I took a loss on that one, guys, £6. And everyone will go, well done, brilliant. But if you lose 200, they're going to hammer you and go, well, you know not to do that. Why are you still doing it? And it's not the Betfair's fault. It's not BetTrader's fault. It's not the internet's fault. It's those 6 inches between your ears. And for 90% of people, that's where our problems are. So don't be greedy and don't overstretch. So firstly, we need to find out why we're making those decisions and then how to change that behaviour. So the first thing you got to ask when you have one of those big losses is, why did I stay in? All right. And for me, it's the same every time. So I've got to change that. And what I recognise now, and I can tell you what I recognise now, even if I can look at a horse and every one of us in the room says, yeah, that horse is beat, no doubt. If that price isn't going out, then people know more than us and we need to get out because there's a load of people out there. Most people know more about horse racing than me. So if they're saying, well, we know this horse, it's just a lazy horse. It's just going to chug along at the back. It's not interested, but it will just keep going and it will not stop. That's just how it races. Well, if they know that and I don't, that's why the price won't go up because they just keep backing it going, yeah, it's just a lazy bugger. It'll come good. And I'm thinking, well, it's beat. It's beat. Do you know what I mean? It's like, that's one thing I've got to start improving is my knowledge of the horses. So we've already discussed risk averse versus risk seeking. So when faced with a winning situation, humans are risk averse. When faced with a losing situation, humans are risk seeking. And as I said, if I offered you 20 quid now, do you want it? Yes. Within 1 second, no hesitation. But if I said to all of you, you've got to send me 20 quid, you'd all go, well, no, why? What for? Well, I don't want to. Can we flip a coin? And, you know, most people would say, if I give you a coin flip and you've got to send me 20 now, but we'll flip a coin. And if you get it wrong, you got to send me 40. But if you get it right, then you don't send me anything. Most people will say, yeah, well, let's flip the coin. They're happy to double their loss to try and avoid it. Now, that's instinct. That's what you've got to overcome. Because in the market, when the market goes up, you'll very happily take that win. When it goes down, your mind will say, well, we'll just let it go down a bit here and I'll get out if I have to, but it might come back. You want to give it every chance to come back. And I've just found the sooner it goes against me getting out, I get out of far more trades that way and end up with winning races. And every time that happens over the next few months, I'm going to show you. And most of you that are in the horse racing room have seen it. Denise, you would have seen me do this a lot, wouldn't you? Where I'll post one in the room and I'll circle it and say, I took a loss on this one and I've swapped. So whenever you hear me swapping, that's when I've done that. And I've done it quite a bit over the last few months. So that's what I'm talking about. It's just, oh yeah, look, he's lost £5 on that trade, but he's won 25 on the race for a £20 win. So the way we deal with losses and our immediate reaction also hinges on a couple of important factors. First, the size of the loss. A £10 loss will hurt a lot less than a £100 loss. And then a size of the loss in relation to the bank. That £10 loss may hurt you if you only had a £20 bank, and the £100 loss may not be a problem if you had a 10 grand bank. So if you're forced to take a loss that is considered large in comparison to your betting bank, that causes stress and anxiety, and cause an instant need to recoup the loss, and you'll take further irrational risk to do that by either betting more on the next event or betting on an unfamiliar event. So Wendy's already learnt that, and she walked away the other day. And a few of you have posted in the room, I had a bit of a loss. I just had a brain fade and I just walked away. Some of you have gone a bit more extreme and just said, well, I just shut the computer for the day and that was it. And that's the right reaction. It's much better than trying to just dive in on the next race and blowing twice as much trying to get it back. So that's why I always advocate never risking more than 5% of your bank. So if Wendy's got £1,000 bank, then her limit should be 50 quid. But if she's only trading with 400 or 500, then what the hell are you doing taking a £200 loss on a race? It just doesn't make sense. You know it, I know it, everyone knows it, yet we do it. We've got to overcome that. So here's another reason for loss, betting because you need the money. Now, this is going to become, unfortunately, a huge factor in the next 6 to 12 months in this country. A lot of people are going to lose their jobs, and there's a couple of them in this room that have, and I'm not going to name any names, but you know who you are. And what happens then is without the job as a backup, you think, right, well, I'm going to go and do this. Now, none of you are at this stage. I'm talking about other people here. But what happens in a depression or a recession, and when people start losing jobs, it's well documented, and particularly back in Australia in the 1930s, there was a huge, you've heard of it, the Great Depression, right? We've all heard of it. We grew up learning about it. Well, on any given Saturday in Australia, there was 130, 150,000 people going to racetracks, because when you've got no income and no job and no nothing, it seems the only way you can make money is through betting. It's like, well, yeah, if I can, I've got no other choice. I can't get a job. I can't just produce money out of nothing. And they turn to gambling as a way. And that's going to happen in this country. Don't get me wrong. This furlough scheme, people are sitting at home getting paid, thinking this is great. Well, that's all going to end in October. And then all the businesses are going to have to start paying the wages again. And it's then that those businesses are going to go, well, hang on, we're losing money hand over fist. No one's coming into the shop. We're not selling stuff. No one's coming to eat. We're out of business. They're all going to shut down. Tens of thousands of businesses in the UK are going to shut down in October, November, December. They won't see Christmas. And a load of people are going to turn to gambling. Now, I'm not going to try and exploit that, but I'm aware of it. And I'm going to try and get to those people before they go into Bet365. And I'm just going to say simply, look, I know you're going to do this. So if you're going to do it, come here. Let me help you do it properly, because otherwise you're just going to be out in a month, have no job, no money, no nothing. Risk management goes down the toilet, and, you know, it's a real problem. So when you're betting because you need the money, this is a big thing for when people quit their job and become full-time sports traders. Again, I refer to that guy on Twitter. He's one of my trolls, but he's a decent enough bloke. Dr. C, okay? He's just been made redundant. And so he said, well, it's as good a time as any for me to go full-time. Now, he's just using his bots. He's set his bots up and he's getting them to trade automatically. And the first week that he did it was an absolute disaster. I think he lost like 800 quid the first day, and it was horrendous for him. And he really started to stress, thinking, well, I can't sustain this. I don't think I'm going to be able to do it. But before, the losses never bothered him because he had his job and the money would just come back in at the end of the week. So desperation to make money can have a really destructive effect on your mind. You know, when you have to make money, every game and every race is seen as an opportunity and can't be missed. Rather than making smart decisions when they come up, they just think, well, the more I trade, the more I can make. Risk management goes out the window, but the loss hurts twice as much because, you know, you couldn't not only afford to lose that money, you don't have a job for it to come back in with. So at this point, any loss is not something you can afford because you've got to pay the bills. So the desire to recover it overwhelms and just creates bigger problems. You'll never succeed betting in this way. So think of it like this. If you can't afford to take the missus out for a nice meal and a London show in the West End and blow 300 quid, if you can't afford to do that, then you can't afford to blow 300 quid on a football game. If the first one would bother you, then the second one will hurt more. And I'm in that category. I think at the moment, with the way the world is, I think, blimey, 300 quid to go out for a nice meal and a London show, you know, plus the trains down there and a hotel overnight. I think, I can't do that at the moment. And so again, you know my limit. I come back to under 200. But if I could do that for under 200 quid, I'd do it tonight. It's the weekend. I'd say, do you want to go out for a nice meal? We'll go to a London show. It's going to cost us 200, 180 quid. Wouldn't even hesitate. Absolutely. But 300 quid, I think, we better just sort of keep that. But that's me, and that's why I've set my limit at 200. Because, if I go and lose 400 on a race this afternoon, I'd be absolutely devastated. I just think, well, I'm the biggest idiot on the planet. So think about your trading level like this. And we went through this last week. So I want you all to do this exercise with me as we go. You just got to be honest, all right? There's no correct answer. There's no wrong answer. But just write in the Zoom chat. You don't have to if you don't want to, but if you're comfortable doing it, just doing it. So when I get to a level that you think, yeah, that bugs me, that pisses me off, I don't want that, just type it in. Either put the amount in or just say now. So would anybody in this room be bothered losing 2 quid? I'd say not. So no one's going to answer. So, okay, what about a fiver? Does that bother anyone? 10 quid. Does that bother you? 20 quid. 40 quid. So Mark's in there at 20. David's in at 20. 50 quid. So Martin's in for 40. So Denise is 20. So see, you guys are already starting to find your limit. 50, 50, 50, 50. So if I was to say to you, well, we're going to trade something now and we're going to all go and risk 100, that would be sickening, right? Absolutely. So you've got to find your limit. So when you put those limits in, you're now seeing what bothers you. So if you're happy trading up to a loss of £50, then that's your limit. So under that. So if 50 bothers you, don't lose 50. Keep your maximum risk 35, 40 quid on a trade, because then you think, well, that's fine. Mentally, I can cope with that. 2 winning trades and I've got that back. So that's how you try and find your limit. And I've done that, and my limit's 200. But remember, I've been doing this for 12 or 14 years. So I'm very, very confident in my own ability that if I lose £200 trading the cricket, that I can get that back in one afternoon trading the racing. It's still a loss. Don't think I'm going to come out of it at the end of the day and say I'm even. I'm going to come out and say, I lost 200 on the cricket, but I made 200 on the racing, so mentally I'm okay. I just move on to tomorrow, and that's that. But I don't say I'm even, but yeah, I've recovered the loss. I'm not even, I've recovered the loss. So then, yeah, what if the next trade you placed lost 50, not so good? Then you put 100, 200, that would hurt. So if you've got a bank of $4,000, you can afford a £200 loss. If your bank's 200, you can take a hit of 100. But if you're trading with a bank of 1,000, then 50 needs to be your maximum liability. And then we go and look at why we chase losses and not others. Partly it's to do with the size of the loss. So if you guys lost £3 on a horse race, you would have no desire to jump into the next race and instantly get that back. It'd just be like, oh, I've bought myself a cup of coffee. It happens, 3 quid. Nah, you don't even think about it. You just do the next race. But if you lost 50, a lot of people will think of, oh, that's terrible. I've got to get that back now. The reason we chase losses is partly to do with the size of the loss and therefore the size of the emotional pain. That's what Steve was talking about. Losing hurts. It's painful. It's a genuine feeling. And if you have a big, big loss, it can hit you in the stomach. You literally feel sick. You think, oh, my God. You know, it also depends on how confident you were. If a team had scored in 25 consecutive games and you bet on them to score and they don't, you feel absolutely robbed. And you think, oh, well, I've been totally robbed. I've got to get that money back now. That shouldn't have happened. You'd consider that a bad beat, to borrow the poker term. So the way you reconcile it with yourself is important. And this is, again, sorry, Wendy, but this is what Wendy did. If you can stay calm and you can see that you've won in 15 races in a row and that loss was your first one, you can accept it as part of a business expense and move on. So Wendy didn't blame anyone but herself for that. She knew what she did wrong. She called herself an idiot. She shut the computer. She walked away and she came back and she's now dealt with it. But the lesson's there. Because if she didn't feel that pain, if it didn't hurt, she'll just do it again today and tomorrow and the next day. And that's what was happening. It wasn't hurting her. She was just, I'm going to succeed at this. Oh, there's another loss. Doesn't matter. I'm going to do this. I'm going to do this. Oh, another loss. And she wasn't focusing on it. She now knows that she's good enough to not have those losses. They should not be happening now. So when they are, you've all got to get cross with yourself and think, I did that. No other reason. I did that. I know I shouldn't have done it. I know I did it. I accept it. But I also know I'd won the 15 races in a row before that, so I'm going to knuckle down, win the next 15 in a row, not take any exceptional risk, just do my process, and that money will come back. And what have I got out of it? 3 hours of wasted time and learn a lesson. I'm happy with that. Let's move on. All right? So if you let the fact that you lost affect you and you blame anything but yourself, you are likely to want to just dive in and recover that loss, okay? So the best way to manage a loss is decide the exit point or pain barrier before you place the bet, which is what we've all done, right? 50 quid. So if we go and do trades now and we keep that loss under 50, there's no emotional attachment to it. We just think if we're wrong, we're going to lose 30 quid. If we're right, we're going to win 40 quid or whatever the bet is. You know, then you can accept that one of those two things are going to happen. And I've done that in the cricket, right? I've placed this bet on the cricket like the rest of you. Now, if England are good enough to win the game, then I can accept that. We won on the last match. We might lose on this match, but I'm okay. The loss is well within my limits, and I'm like, it's fine. Just let it roll. There's no emotional attachment to it. So one of those two things is going to happen. We're either going to win money on the cricket or we're not. And we're already able to accept it because we've dealt with it. The money's there. England might win this game. I don't think they will. I think that, you know, we're a day and a half in already and England are only 3 wickets down. Seems a decent batting track. And, yeah, we're going to get a washout tomorrow. So I'm quite happy. So anyway, you have a look at, you know, you've done a back bet of over 2.5 goals at 220. You do it for 50 quid, our maximum risk for £1,000 bank. You've now got an option to let the bet run until the end of the game because the worst thing that can happen is you lose that 50 quid and you'll win 60 if there are 3 goals. Decision made, loss understood and accepted, and place the bet. All right, but there is another way. For the same bank size, you can bet 100 at 220, but you must decide now that if that price gets up to 440, you're going to exit by laying at 440 for 50 quid. I tend to always do the former now because I hate doing a bigger bet and then when it goes against me, having to get out and then the bastards go and score the 3 goals. That drives me crazy more than just losing the 50 quid. So rather than bet 100 and then watch the price drift and think, right, I've got to cut the decision now, I'm out, I will just bet the 50 and say, guys, you've got 90 minutes to score 3 goals. If you can't do it, I've lost my 50. That's just me and a decision that I've made. But if you're happy taking a loss if it goes pear-shaped, then by all means, go bigger and win twice as much if you're right. But discipline says you've got to decide at that point and then get out. So it also keeps your loss locked to 50, but it allows you to win 120 if you're right. Also means if there are 2 goals in the first half and the price goes to 120, you can exit for an £80 profit no matter what happens. So that's sometimes what we do. You know, you've seen me do a double bet at the start of the game and I'll wait for 10 minutes. Then I'll start trading out of it and go back to my original bet. All right, so that's just how you deal with that. We've spoken about not getting out. So we've, you know the consequences of that. And many losses can be massively reduced simply by having discipline. And that loss we've discussed a lot today is just because of that. There's no other reason. Wasn't a mistake. The mouse didn't stop working. The computer didn't crash. Betfair didn't fail. It's just that one thing. It was just a bit of slack discipline. You know, I can imagine watched it, sit like a rabbit in the headlight and just hope and praise it comes back. And taking that risk is just a lack of discipline. And it hurts a lot more when you think after the race, I realise now I should have clicked that button when it was £15 loss. I was thinking about it and I was about to click it, but I thought, I'll just wait. And then it's even more painful after that. So what you ask yourself, are you, and most people that come to me are you one of those traders that pick up small wins constantly and then boom, blow the bank? Because a lot of people do that. And here it is. Instantly the recriminations begin. They're furious in themselves. They could have taken a £30 loss before the start. They realise that they could have even taken a £5 loss and moved to the next. Why did they just risk 500 and lose on what could have been a £30 loss? You know the answer, like that they didn't have the mental capability to accept it and deal with it. But you've got to find that if you've got any hope of being a success. You know, it's no good trading 15 to 20 races in a row and starting to think, I'm just getting somewhere, and then bang, you have that slip back and away you go. So what we learned is when you win or lose, different things are happening in your brain, and you need to understand what they are to be able to change them. So let's look at how dopamine works. Every time you have a win or something good happens to you, or you eat chocolate and it tastes nice, dopamine's released. It feels good. So your brain's developed these neural circuits that unconsciously assess reward. Oh, pardon me. They assess reward, and because dopamine plays an active role in those circuits, you will automatically act in what you think's the best interest. And so because you like it, the feeling's good when you win or eat chocolate, your brain says, I want the dopamine release. That's what I crave. So when you get in a winning position, your brain says, click the button, we get some dopamine. So you click it. Oh, great trade, mate. Well done. When you're in a losing position, no dopamine. So your brain won't let you click it because it's so trained to getting the good outcome and what you like. You enjoy that more than what you don't like. It doesn't want you to click the button. It's like, don't click it, don't click it, don't click it. Wait till it's green, don't click it. And then it goes up, it goes green, you click it. See, well done. You did great. By waiting, we got what we wanted. Then the next time it happens, it tells you the same thing. You wait, bang, £200 loss. So it's going to make you try and act in what it thinks is your best interest, which is a win, right? And it's only that interest that releases the dopamine. So the probability of an outcome and reason are no longer the most important factors in your decision-making. Even if your team's a 20-1 shot and you know they won't win, you stay in the trade, hoping for them to come back. I don't think the Broncos are going to win this game. They're down 42-0 with 16 minutes to go. My brain still wants them to win because they're my team, but I think I can accept that they're not going to. But they might score. No, they didn't. They fell a metre short. Oh, they're going to get blanked, aren't they? This is embarrassing. So you get that win. So the unconscious, and it is unconscious, that's why I'm telling you, the unconscious need for the release of dopamine becomes most important. Your brain has learned that when you win, you get it, which it loves. So when you're faced with that decision to take a loss for a hold or hold on for a win, what do you think your brain's going to suggest to you? And you will do this unconsciously until I teach you otherwise, which is why you're here. So you've got to know that every time you are in, and you'll now recognize it. Wait till you're in a losing position next time. You will recognize it. As soon as a trade starts to go against you the next time you do it, your brain will say, just hang on, this will come back. And you'll think, you bastard, you are doing it too. You'll recognize it and you'll go, no, I'm not having that. And you'll click out of it and you'll actually teach your brain to feel good that I've just taken a £6 loss. If that horse wins, it would have been 200. Well done. And you'll give yourself that release of dopamine. Over time, this will start to feel good when you take that small loss and that thing goes on to win. And you look and think, I've just lost £6 and I would have lost 300 if I'd let that go. The old me would have let that go. And you will literally feel like you've just won £294. And then bang, you've got it. And you're now starting to teach your brain to think, well, I've got to pay out here £6 or 300. Which one do I want to pay out? I want to pay out the £6. Imagine if you could buy something, guys, for £6. And if you wait 20 minutes, it's going to cost you 300. Which one are you going to do? Just buy it now for £6. That's how I want you to think. I'm going to buy this now for £5. Bang, bargain. And then you've got the chance to go and do another trade. Oh, now it really looks beaten. Click, up it goes. You win £6 on the next trade and you walk away with £1. And then if it does go on to win again, you will feel really good about it. So this is what you're doing unconsciously, and we've got to learn about it now. So lots of studies have been conducted which target those neural response to rewards. The results were unanimous in the fact that when one performed an action over and over again and was given a reward randomly, dopamine levels rose. Just like a normal punter that bets race after race. A punter loses, and then hits a winner. Dopamine release, pleasure. Let's do that again. So the downside of what we're doing is, as you do this over many years, like what I'm doing with the horse racing, I now don't get any dopamine release with a win. It's just expected. So trade, exit, leave, trade, exit, leave. I get the dopamine release when I do a losing trade and I exit it small and then go and do another trade and it wins. That makes me feel really good, and I think that was a smart move. But because my brain just expects the other, it's not so much. You've got to be aware of that as well. But if the reward was given consistently, like every fourth time the action was performed, the dopamine levels remained constant. So finally, if no reward was given, dopamine levels dropped. And that's sort of where I'm at, because if I go and trade 30 races, I fully expect to win 28 of them. So I'm not getting a reward because it's expected. But if you knew that every fourth race was going to be a winner, you'd eventually stop getting excited about it. And that's me. I expect 100% that every race I trade, I'm going to win at. Certainly not in sports betting, not even close. But in racing, every race. So I don't get it. So these same random rewards can be seen in trading or betting. You know, when the outcome's based on chance, we don't know if we're going to win or lose. Therefore, if you win, dopamine levels increase. There's satisfaction. But in horse racing, we expect to win. So, you know, in betting, like the football, in this cricket trade, right, we don't know if we're going to win this cricket trade or not. We hope, we think we've done the best analysis we can, but we don't know. So if we get it right, we'll feel great and we'll get the dopamine release and we'll think that's excellent. But in racing, I expect to win every race. I wouldn't click the button if I didn't expect that I'm going to win that trade. So for me, it's a bit different there. So after a while, the wins release less and less dopamine as your brain becomes used to it. So it will try to get that to place bigger bets. This is what I was talking about before. People get bored just winning 5 or 10 pounds a race. They don't get that dopamine anymore. They don't feel good. So they think, well, I'm going to bet more. And then they try and get it back again. The adrenaline comes back because now they're risking 50 quid instead of a tenner. And you've got to try and avoid that. All right. So like I said before, I try and teach people to make 5 or 10 a race to get used to it. They do it constantly. It's not enough. Now they want 10 or 20 a race, and then 40 and 50 a race. Some say it's greed. They might be right, but I say it's because they're bored with winning a fiver and they think, well, this is just too easy. I don't get anything out of it now. So they want more. So if you've got a normal job, and you've got a little feeling that you get at the end of each month. Now, we'd take Denise with her job when she was at the post office. I don't think she's there anymore, but she was at the post office. Hated the job. You hate going in. There was probably one day a month that Denise felt good, and that's the day she gets paid. And it's exactly the same with my Sharon. Hates the job, hates going in, but on the 26th of each month, feels good because the pay hits the bank. So if you've got a normal job, that little feeling you get each month when your pay gets the bank, same thing. A win means you get paid in sports betting. You wouldn't get excited if you found 50p on the ground, would you? But you would if you found a tenner. So that's the difference. And people search for that. They get sick of winning 50p a race. It's just boring. So I'm going to up the stakes and go big. It's a big mistake. So if that 5 to 10 pounds stops becoming exciting, becomes a bit boring, and you think, oh, I'm back in a day job just grinding out tenners, tenner a race, then the excitement of the bigger bets starts to take place. So looking at your attitude to money, right, I didn't think I'd have to address this, but it does come up so often, I have to mention it. Now, I think we've pretty well covered this the other day, so I don't think we need to go through it again. But remember I said, you got 3 people. One of them wins 500 on a horse race. One wins 500 or gets 500 inheritance from a deceased relative. And person C is like my Sharon, goes and earns 500 at their regular job. And we all go to the casino or the races and lose the 500. Who's lost the most? A lot of people say C because they say, oh, well, she worked for it. And I just don't get that. Well, you all know, so I don't need to cover it. You all know that those 3 people have lost the same amount. I don't care if you've won the money, found the money, inherited the money, worked a job for the money, stole the money. 500 is 500. And if you lose it, you've lost 500 no matter how you came into it, all right? So we don't need to go through that one. We've discussed variance, okay? You look at variance. Variance was what happened in Arsenal-Liverpool the other day. That's variance when Alisson and Van Dijk make those mistakes in that game, because that's not going to happen. But having a look what variance means, just to make it clear for you, say you've got a basketball player. He's the star of the team, right? And he averages 30 points a game over the last 5 years. So you go and bet on him scoring over 29.5 points. He scores 22 and you lose. That's variance. Tomorrow night, he may get 38. So over the 2 games, he scored 60 points, bringing you bang into line with his average of 30. If you take like his past 10 games. Do you know what I mean? So with variance, the more trades you make, the lower the variance will be. And so naturally, the more you make, the less it will be. So it's got you. That doesn't read right. What have I written there? With variance, the more trades you make, the lower the variance will be. So naturally, the more you make, the less it will be. That doesn't even make sense. I've written that badly. So but it's, the more you bet on him scoring 29.5, the closer it's going to get to this 30 average. So you'll mitigate the effects of variance over time as you make more trades. Over a small sample, say 100, the variance will be high. So let's say we toss a coin 100 times. It wouldn't shock you if 60 were heads and 40 were tails, right? Or let's just take 10 spins. If I'm going to spin a coin 10 times, if I said 6 were heads and 4 were tails, you wouldn't be shocked. Over 100, that would be a bit less likely that it would be 60-40. Over 1,000, there's very little chance that it will be 600 to 400. And over 1 million, there's no way that you'll get 600,000 heads, 400,000 tails. The bigger you go, the closer it'll get to 50%. I'd say over 1 million coin tosses, you would end up with, maybe 510,000 to 490,000. And I doubt it would even be that high. So if you're expecting, if you expected outcome is positive, say 55%, well, that's right, Ian. 38 goals a season for a footballer looks like a goal a game. But variance, he might score a hat-trick, but then he might not score for his next 3 games. So the average is 1 per game, but he didn't score in 4. So that's your variance, all right? So the point of this is, as far as mentality goes, don't let a bad run of trades break you mentally. So for those of you that have been getting my email, if you look at the trades over this month, they've been dire. I understand that, and I apologise for it. But if you go back over the year, you'll be in front. Not a lot, but you're in front. So by the end of the year, if I come out of this bad patch, which I will, then you'll end up in front as well. And then you'll be able to look back at it and say, well, look at the variance. January was fantastic. February was poor. March was okay. April was okay. June was good. July was terrible. And it might be down to the fact that I'm trying to do so much at the moment that I'm not putting as much time into them as I am. I'm doing the same routine, which I'm going to do this afternoon for you with the football. So I'll come up with the same answers, but the results just aren't happening. I don't know why. It might be because there's no crowds. It might be because the players aren't fully fit. They're not in tune. Liverpool have won the league. They haven't lost. I think they lost no games in 38. I think they've lost 3 of their last 4 or something, but there's a reason for it. But just stuff like that. So if you were to just, look at over time, if you do 5,000 bets, if you're half decent, you're going to win between 55 and 60% of sports bets, right? But if you take any random 20 of those bets, you may have won or lost 15 of those 20, giving you just 75% on those particular bets. But over time, it'll bring you back to 55. So the point is, as I say, don't let a bad run of trades break you mentally, but don't let a great run of winning trades make you think, oh, you've cracked it. You'll get great runs, you'll get losing runs. And the only way to manage them is manage the risk. So if you stick to that liability, you should never blow your bank. So aim for that 3% per day. If a bank offered you 10% a year for your savings, when most banks are 1%, would you take it? Of course you would. You'd be over the moon. You think, well, my bank offers me 10%. Every other bank just offers 1%. So stick to 3% when you're a full-time trader. 3% rule is simple. If you can make 3% of your bank per day, then you've doubled your bank in 24 days. That gives you 6 days a month to not do anything, have a day off, spend time with the kids, just like a normal job. You won't make exactly 3% every day, but we're talking average, and it gives you a goal. So my goal's like 2,000 a month. Okay, so if I just look at 2,000, there's my green line, what I want, but these are my results, up or down, have a couple of good days, then I have a loss, and away you go. So you might make 5% one day, 4%, have a losing day, and 6%. All right? So punters will have a grand in their bank, and they think that they can double it in a day or a week. And they may get lucky, but it's unlikely. So when setting goals, don't fall into a trap of thinking this is continually scalable. Don't think, well, I can make 1,000 this month, double that, and then 2,000 I'll double to 4, and then I'll double that 4 to 8, then I'll double the 8 to 16. because then you start getting bigger bets. And if you're not comfortable losing 50 now, imagine if you end up with a 10 grand bank and now you're risking 500. It's still going to hurt if you have a loss. So that's all about the money, taking the leap. The reasons people want to move into sports betting vary greatly. Some want to leave a job they don't like. Others are retiring. Others are, going to be made redundant and stuff. So others move to an area where there's very few jobs, like when I went to Scotland, and others like me make a lifestyle choice. So whatever the reason for entering the world of sports betting, one thing remains the same. It involves a major increase in pressure and anxiety. Because when they start investigating it, they got a normal job and it's just a hobby. They throw a few hundred into an account, have a go at it, and most likely they're going to have some losses, reload and go again. Over time, they have some wins. They start thinking, I'm going to do this full time. I can do this. They start doing bets on the weekend. They're making some money. And eventually they get good at sports betting, and their hobby betting equals the same as their job. They think, well, I'm making the same as I get at work. I'm going to go and do this full time. It's a whole new ball game when you're trading for a living. You don't get paid for just turning up, right? You're now like you do at your job. You're now in a situation, if you don't win, you don't get paid, and that creates huge pressure. There is no financial consequence for a loss of, say, betting £5 on a horse or 10 on a football game. Because you got a normal job, your rational brain won't kick in and question what you're doing. When you're risking 150 quid on over 2.5 goals, and you need those goals to feed the family, the anxiety can be overwhelming and you can start making poor decisions. Fear of a loss can make you exit a trade that you would have won on had you just stayed with your analysis. So needing to win can make you stay in and pray for a goal when the smart things to do is exit. So the best way to address that is, again, come back to planning. So let's assume you need $2,000 for the month to keep the household running, covers all the bills and everything. I'd suggest having at least 3 months worth of household requirements in a separate account. 6 months would be better. Okay, so I've done that. I've had money that's just sat in an account for probably 5 or 6 years now. Luckily, I haven't touched it. So Sharon and I have got 20 grand put into an account that we don't touch. Now, the reason it's so much is if we've got an emergency and have to get to Australia, like if my dad, was poorly, or one of her parents, and we just had to get on a plane right then and there and just walk away from this, we'd have to keep paying rent here. We'd have to, you got to just have that. So it's there like an emergency fund. So I don't panic. If I don't make any money sports trading 1 month, I can say, well, we'll go and take $2,000 out of that and pay the bills. So what I'd suggest is having 3 months worth of household requirements in a separate account. 6 months would be even better. So once your brain knows you got everything you need covered for the next 3 to 6 months, you can start using smarter risk management and the pressure decreases a lot. All right. So when you sort of start out, here's a typical day, a light Monday, no big race meetings. I started work at 4:30 and finished at 8:30 this night. 4 hours work, 9 races traded, 8 wins, no stress. It's not a huge amount of money. That's what sort of Wendy's been posting most sort of days. So I'm not making more money than you guys. I'm not doing any better. I'm just doing, but see, look, there's a loss, £8.20. Recovered next race. You don't want to be seeing any minus 200s in there. And then we can go through the contrarian betting strategy and all that stuff, because before I finish up, I want to go and get onto this other email I was talking to you about. But it's not only about your mind as well. We spoke to Steve about keeping fit. So I found a huge difference in my performance when I could spend 40 minutes a day doing laps of the pool. Now, I've not been able to do that for a few months. It became a bit of a routine. I'd wake up, have a cup of tea, head to the pool, do my 60 laps, which sounds great, but it was only a 25-metre pool, so I wasn't doing that much. I come home, have a shower, eat my breakfast, and then I literally feel the endorphins. I feel really good. When I'm out of that routine, it doesn't take long to start feeling lethargic and out of sorts. I get a bit of a pot belly sitting here, which I've got now. I've really got to start getting back to the pool. So then we get to the conclusion, guys, which we've done this. Create a network of like-minded people. Well, I've done that for you. We're all in the 100 Club. We're all in Webinar Club. We're all in the horse racing room and whatnot. So we've got that network. They're all betting on the same sport. They're all doing the same trades. And, we can follow people with the ups and downs that we're putting in the room. We're sort of looking after each other. Create a conducive betting environment. You can't do this full time and run it as a business sitting in your pajamas on the sofa betting on your phone. So like I've done, set aside a room in the house, convert it into a professional space for those hours of the day that you're going to work, and it will make you feel like you've actually gone to the office. Make sure you get up, get dressed like a sports trader would. Imagine that you're going to go and sit in a room with 20 other sports traders. You wouldn't sit there in your pajamas with the pink elephants on them, would you? Right? So dress for the job you've got and not like you're just working at home. So embrace the process of winning and not the outcome. The process of analysing, choosing a market, risk management, all that, and then rather that than just the outcome. When you get good at it, most trades will have a positive outcome and you'll make money. There'll be some that lose, but they won't have major emotional effects because you've limited the loss. So people that need the thrill of the win and suffer an emotional crisis after a loss, they're not going to make it. You're going to be doing this for the next 10 or 15 years. So the wins won't have a great effect and the losses won't have a great effect either. All right. So what I try to do is I'm going to do a few days of it with you in the 100 Club is I'm going to deliberately take losses. I'm just going to go and show you how, look, here's a £5 loss. Just click it. No effect. Move on. You can do this today in training mode. Get into training mode on the software and just practice taking losses. Just click randomly on any horse. And when it goes against you, just trade out. Just think there's a loss. There's a loss. There's a loss. And once your brain's used to it, think, well, that didn't kill you, did it? Well, no, it didn't. So next time your brain gets into a losing situation, it knows, well, this ain't going to kill me if I click this button. There's no ego damage. I'm used to it. It's fine. I know that we can trade out of this and then either get back in on the same race or next race I'll win £6 and get that £5 back. Once you train your brain to do that, it won't hurt. But unfortunately, I'm part of this problem because giving you the in-running guide, teaching people how to make money race after race after race, they're not used to having losses. So when one comes, well, I shouldn't lose because everyone makes money every race doing this. That's rubbish. A lot of races, I will take a loss and switch horses. So get the hang of that, okay? So it's just a way of going through it. But I highly recommend that you get this book as well and have a read through it. So it's like your brain, I'm going to bet on this game. I think there's going to be a goal. And your brain will go, all right, how much are we going to risk? £20 maximum loss, your brain. So if it all goes pear-shaped, we can only lose £20. Yeah, are we good with that? Brain, yep, we are. Go ahead, place the bet. We lost. Brain, no problem. It was only 1% of our bank. We can recover that easily, carry on. Brain doesn't go into stress. No anxiety, no loss, no stress. The important thing to learn is to deal with the loss before you place the bet. Most punters only think of the win. They expect to win. They think they're smart enough to have got this right. They feel sure something like a goal is going to happen. They place a bet. They give no conscious thought to what happens if they lose. They've not considered losing. They don't contemplate it. So when they lose, their brain goes into meltdown. So imagine your missus when that new 50-inch TV turns up. And as you open the box, she says, what's this and how much was it? When you explain that you just spent £1,200 on a new widescreen for the World Cup and what a bargain it was because it was $1,800 last month, what's she going to say? That's okay, dear. Smart purchase. Let me help you set it up. Or is she going to say, are you kidding me? How dare you do that without discussing it with me? Well, just think of your brain as your missus. All right? I do. That's the same thing. If I said to Sharon, I did this race and I lost 50 quid, she would go, that's all right, it happens, just move on. If I said, Shaz, I just bet $5,000 on a horse and we lost, she'd kick me all the way from here into Skipton. And quite right too. Her brain was not primed. Had you discussed it and said, look, our TV's 8 years old, the World Cup's coming up, this TV's 600 quid off normal price, can we get it? You'll get a completely different reaction. So it's the same with your brain. Talk to it. Don't be impulsive and think that you're smarter than it, because you aren't. Once you and your brain are in sync and you've got a good grip on what you're risking, why you're risking it, the losses won't hurt nearly as much and they're far easier to deal with. It's only when you have an expectation of winning and then lose that the shock causes you to react in a foolish way, all right? So I hope that all made sense to you and you understand where I'm coming from, because all I can do is really tell you my experiences over the last 13 years or so and how I feel when I react to things and what's happened. You got to try and understand the process of what's happening when you win and lose and try to counteract it by not getting too excited when you win and not throwing the toys out of the pram when you lose. Just treat all wins and losses the same. They're expected. So with the cricket, I'm either going to win or lose. I know how much I'm going to win if I win. I know how much I'm going to lose if I lose. And I'll just move on from either one of those outcomes. So if you can expect 8 wins and 2 losses from every 10 trades on average, when they come, there's no big deal. You know that the bills that will come this month, I know that I'm going to have an £80 loss on Sky when the bill comes in this month. I know I'm going to have a £20 loss on Racing TV. So when they come, you just accept them and say, yep, there's that, move on. So if I have a £20 loss on a horse race this afternoon, my brain won't go in a meltdown. I'll just go, yeah, that's cool. All right. So try to keep your wins and losses in the same ratio. You don't want to be wiping out a nice run of 10 quid winning trades with a big £100 loss like one of our well-known traders did the other day. All right. We don't want to do that. Losing trades are just the cost of doing business. So there we go. So what I'm going to do quickly is go and share this email with you before we go, and then we'll go and have some lunch, and then I'll be back to do some racing. So let me just go back to this homepage. I'm going to go and get this email up and have a read. All right. Hey, Tony, hope you're keeping well. I know from following your emails that you've been struggling with pre-match selections lately. It's nothing to do with more than, having a bad patch. It can't be easy when you have people studying your every move, though, but keep the faith. The reason for my email is to ask a question regarding mindset. It's fair to say that my mindset is still not where it should be. I've had a few lucky escapes over the last fortnight where I exceeded my £5 stake, but fortunately I've managed to accrue some decent P&L. In acknowledgement of my continued lack of self-discipline, I withdrew over half of my bank last night. My daughter starts a new school in September, and as a dad yourself, you'll know only too well how much a full set of uniform and sports gear costs. The amount I withdrew will cover a lot of that cost. So why do I feel so negative about it? Why do I feel like I lost the money? It's crazy because I know I haven't lost it. I don't understand why I'm feeling like this. And I think if I can understand it, it will help me get my head straight. I wondered if you could perhaps raise this in today's webinar, assuming you're still talking about psychology. Be interested to hear what you and the collective think. So I may not have been able to join many webinars due to work, but he watches them in the evening and whatnot. So they're great, learning a lot. Thanks very much. So that was the email that I got. And we sort of covered this with Steve and a bit about the washing machine. It still hurts, right? If you've got to spend 300 quid on a washing machine tomorrow, you don't enjoy it, but you know it's got to be done and you do it. Whereas if you lose 300 on a race, you feel sick. You're just absolutely mad with yourself and it hurts. But why does one hurt and one not so much? Because, and we've got this same situation here. And I've got exactly the same thing. Every summer, I buy the girls their school shoes. Their mother buys them the uniform, the tops and the skirts and stuff, and I buy the shoes. That's just what we do. So I take them shoe shopping every summer to get the new school shoes. And yeah, they're not cheap. I get them Clark shoes because they're, proper shoes for their feet. I'm not getting them the cheap ones that can fall apart in 5 minutes. You got to buy another pair and stuff. We go to Clark's and that's what I do. But I do come out of that feeling every time like, blimey, I've just spent 90 quid on 2 pairs of shoes and I know they need them and I know it's my daughter's and there's no one else in the world I should want to spend money on more, but I still come out of that shop feeling like I've been robbed. I just think, but I haven't. They're good quality. They're great. They're comfortable. The girls love them. But I seem to not feel as bad losing 80 pounds on a race. And with that one purchase, and it seems to be the only purchase, I do sort of get the desire to, I'm not going to pay that for those shoes. It ain't worth it. I'm going to go and win 80 quid this afternoon on the racing and get that back. It does feel like a loss. Yet if I go to Morrison's and I spend £130 on food for the fortnight, it doesn't feel like that. I don't understand it. We'll talk to Steve. That'll be one of the main questions when he comes on. So if you guys have got any thoughts on that, maybe let me know when we do our next session or we can discuss it in the 100 Club room. Why, when he takes money out of his Betfair account to buy the kids the stuff, I think it's a resentful purchase, isn't it? I think it's that's what Steve was talking to us about. And when you go for food, you need the food. You have to do it. You've done it weekly all your adult life. So it doesn't register. But when you've got to go and blow a chunk on new school uniform, which you mightn't have done for a few years because, jumpers last a few years and tops last a couple of years and trousers for the boys, you're not buying them all the time. So Ian's just said, my missus spent 40 quid on crap in B&M yesterday, but won't buy herself new running trainers that she needs. Well, I can tell you the answer to that one, Ian. It's guilt, right? And that's guilt. So she'll buy something else for the family or for other people or just buy crap. But when it comes to herself, she won't spend the money. So what you need to do, Ian, is you need to go and spend the £40 on the shoes for her. That eliminates the guilt and just say, well, next time I need something that's 40 quid, you buy it for me so I don't feel guilty. And then we've both got what we need. You're not buying it because she wants them. She needs them. And that's it. Yeah, because of the little things are £2 in B&M and she doesn't add them all up. But one pair of trainers makes her guilty. So 20 things at 2 quid. Remember we said, does the £2 loss bother you? No, it doesn't. But a £40 loss will, right? Well, Ian's missus has just gone and had 20 £2 losses, but £2 losses don't bother her brain, but a £40 loss does, and it's fine. So what Ian should do is say, right, this is what we're going to do, all right? You are going to buy those £40 traders that you need today. For the next 10 weeks, we're going to put £4 into a jar, and in 10 weeks, you've got the 40 quid back. Bank it, the shoes have cost you nothing. And she will be fine with that. So, Ian, I want you to do that. You tell her you've made a decision. You need the trainers. They're not a luxury. You need them. We're going to buy them today. There they are. You and I are going to put £2 each into this jar every Friday for the next 10 weeks. And then you've got your 40 quid back. Bank it. Trainers cost you nothing. Her brain will just go, superb. That's what we're going to do. All right, guys, I'm going to leave it there. I need to go and have some lunch. I'll be back with you at 2:30 this afternoon. We're going to do an educational webinar. It'll be the last one for a while on Football Form Labs. You saw how Nick analysed his game between Leicester and Sheffield United the other night. I'm going to go and look at Leicester and Tottenham with you this afternoon, but just generally show you how to use Formlab and the process that I go through. I hope you've got something out of Trading Mindset Week. I hope it's got you thinking a little bit more about your trades and how you feel when you win or lose. And if you're feeling anxiety when you're in a trade, you're probably betting a little bit too much. And if you ain't bothered if it wins or loses, you're probably not betting enough. You've got to just find that sweet spot, what you're comfortable with. All right? And if she stopped running in 10 weeks, you'd spend the 40 quid on pizza. That's right. So, Ian, I'd like you to go and have that conversation with her just for the good of the group. Can you take a note of how she reacts to that idea, what she says? Does she just dismiss it out of hand? Does she think, actually, that's a good way of looking at it? Does it remove the guilt? Does it take away the stress? Because I think the group could learn a lot from how she reacts to that approach and what she thinks of it. Because if it's a great idea, we can take that forward when we've got to look at making these decisions. And, you know, that's how I look at a horse race. If I lose 40 pounds on this race this afternoon, I know that I can make £4 on the next 10 races and be okay. It won't bother my brain, but a £400 loss would affect it badly. I'd think, do you know how long, you idiot, it's going to take you to get that back? And I'd be so down on myself, I'd be right out of my comfort zone and my brain won't function correctly. All right. Thanks, guys. Go and enjoy the rest of your afternoon. I am going to, we got one more comment there. Ron's just put in, I'm similar. Spend fortunes in the pound shop, but won't spend £8 on one item I need. Right, Ron, go and apply what I've just said to that. If you need something for £8, why can't you just put £2 aside for the next 4 weeks and it's cost you nothing? You know, you've really got to start thinking differently and getting your brain to react differently to these things. So, right, thanks very much. I will talk to you this afternoon and bye for now.